In the United States, navigating the economy as a single earner alters every variable in a monthly household budget. Living on one paycheck means managing one rent payment, one utility bill, and one grocery budget. Without a secondary earner to share the load, a single emergency fund must carry the weight of every financial decision. This is educational content, not personal financial, tax, legal, housing, insurance, relationship, or investment advice. This analysis focuses on the objective mechanics of the solo household ledger, specifically what happens when every fixed monthly expense lands on one income. Data from the U.S. Census Bureau and projections from Morgan Stanley suggest that by 2030, 45% of prime working-age women in the U.S. will be single. This 45% share represents a massive structural shift in the American workforce. Single-income living is becoming a demographic standard rather than a societal outlier. While the U.S. economy was historically structured for dual-income households, an increasing number of people are now forced to navigate that same system with a single income. Housing remains the heaviest and least flexible line item on the one-income ledger. This chart shows the singles premium. According to 2026 Zillow data, solo renters pay a national average of $10,470 more per year than those who split the rent on a typical one-bedroom. In major metropolitan areas, the gap widens. For solo renters in New York City, the premium required to live alone hits $20,100 annually. Beyond base rent, core housing costs cannot be divided. A single earner covers the entire security deposit, the full internet bill, and the total cost of renter's insurance. Because these fixed costs cannot be split, the baseline income required for basic financial stability is significantly higher for a solo renter. Daily variable costs also work differently on a single budget. Grocery economics often work against the individual, as smaller packaging and higher rates of food waste increase the per-person cost of food. Transportation adds another layer of weight. Car insurance, gas, and vehicle repairs are all borne by one income, making an unexpected trip to the mechanic a high-stress event. Using MIT living wage calculations, this comparative breakdown shows that the lack of economic scaling adds an average of $5,500 more per year in overall living costs for single individuals. Healthcare expenses follow the same pattern. Health insurance premiums, deductibles, copays, and prescriptions must all be funded by the individual budget. The combination of these unscalable daily expenses drains discretionary income, leaving less room for savings or debt repayment. The U.S. tax code determines exactly how much of a single earner's gross income actually reaches their bank account. In 2025, the standard deduction for single filers is $15,750, half of the $31,500 allowed for married couples. For 2026, those numbers rise to $16,100 for singles and $32,200 for joint returns. Selecting a filing status on your tax return determines the mathematical threshold for your tax-free income. Because the tax-free income threshold is halved for individual earners, the resulting net monthly income requires more precise budgeting to maintain stability. Managing the one-income ledger involves decision fatigue that dual-income households rarely face. Without a secondary safety net, every financial risk is managed alone. Long-term goals like funding a 401k, a Roth IRA, and preparing for Social Security rest entirely on one paycheck. Any financial strain you feel is often a direct result of how one-income math operates, rather than a lack of individual discipline. Gaining financial breathing room requires an objective look at your specific solo blueprint. Start by tracking your true net monthly income and auditing every unsplittable fixed expense. Then calculate your true housing costs, build a 3 to 6 month emergency cushion, and ensure you are maximizing employer benefits like 401k matches. Understanding the true cost of independent living brings financial clarity. With a clear view of the ledger, you can manage a one-income budget with confidence.